Hey everyone, welcome back to Corporate Decoder. We're about to dive into a financial report that shows a company trying to merge. And let's just say mergers can be trickier than a tangled fishing line. Stick around because we'll untangle what this filing really means for the folks involved. And hey, if you are into cutting through the corporate jargon to get to the juicy bits, make sure you are subscribed. We also have a Discord community linked in the description below where we dissect these filings further. Today we are looking at Synovus Financial Corp and their recent Form 8K filing from the 1st of December 2025. This isn't a full financial report, but it is packed with updates about a big deal they're involved in. The main story here is about a planned merger. Synovus Financial Corp is planning to merge with another company called Pinnacle Financial Partners Inc. They're creating a new company called Steel Newco Inc. to be the main entity going forward. This type of merger, where two companies combine into one, is a huge undertaking, and you can bet there are a lot of moving parts. To update everyone on this merger, Synovus is releasing some new information. They've put out an investor presentation. Think of this as a slideshow for the people who invest in these companies, giving them the latest scoop. This presentation gives us a look at how the combined company might be structured financially, as if the merger had already happened back on the 30th of September. On top of that, they are also filing some important financial statements. These are not the actual financial results of Synovus right now, but a special kind of projection called unaudited pro forma condensed combined financial statements. They're showing what the income and balance sheet would look like for both Synovus and Pinnacle combined, as if the merger happened at specific dates in the past. This helps investors understand the potential financial picture of the new, larger company. Now, let's look at what is being traded and registered. Synovus has its common stock registered on the New York Stock Exchange under the ticker symbol SMV. They also have preferred stock, specifically Series D and Series E, also traded on the New York Stock Exchange. These are important to know because they represent different types of ownership and rights within the company. As with any major corporate event, especially a merger, there are always risks involved. The filing lists out a number of potential challenges. One big one is the possibility that the cost savings and efficiencies they expect from this merger might not happen or might take a lot longer than they think. This is a common issue with big mergers, as combining two companies is rarely as smooth as planned. Another significant risk is that integrating the actual day-to-day operations of Synovus and Pinnacle could be much harder, take longer, or cost more than they currently anticipate. This could involve merging different computer systems, different company cultures, and different ways of doing business. If this integration goes poorly, it can really hurt the company's performance. The companies are also worried about how this merger will be perceived. A big change like this can upset customers, suppliers, and employees. If people react negatively, it can damage the company's reputation and its relationships, which is crucial for any business. When companies merge, they often issue new stock, which can dilute the value of existing shares. This means that each existing share becomes a smaller piece of the overall company. Investors are always watching for this, as it can affect the value of their investment. Beyond the merger specifics, the filing also points out the usual risks that affect any business. Things like how the economy is doing overall, what is happening in the political world, and what the competition is up to. These are broad factors that can impact pretty much any company, but they are especially important to consider when a company is undergoing a major transformation like this merger. And on that note, the report is then signed off by Alan E. Kamensky, who holds the title of Executive Vice President and General Counsel. This tells us that the legal team has reviewed and approved the statements made in this filing. Now, let's zoom out and look at the bigger picture here. This filing gives us a snapshot of Synovus in the midst of a massive strategic move, a merger with Pinnacle. The key takeaway is that while the companies are presenting this merger optimistically, they themselves are acknowledging a significant amount of risk. The success of this merger hinges on their ability to execute the integration smoothly, manage potential negative reactions from stakeholders, and navigate the inevitable complexities that arise when two large organizations become one. The pro forma financial information, while a projection, gives us a glimpse into the potential scale and financial footing of the combined entity. However, the real test will be in how well they deliver on the promised synergies and avoid the pitfalls that have sunk many mergers before. We will definitely be keeping a close eye on how this unfolds and what the future financial statements will tell us about the actual results. Alright, that is our breakdown of Synovus Financial Corp's latest filing. What is your take on this merger and what it signals for the company's future? Do you think the risks they've outlined are manageable? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and don't forget to subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching. See you next time.